For some reason, the recent videos I've been doing here have disappeared into the ether. Speaking of ether, this video is about how to trade Bitcoin, Solana, and Ethereum, which some people often call ether by mistake. I've done it once or twice in the many years, but yeah, Ethereum, and Solana and Bitcoin, how to trade them. Anyway, I hope that this video, like I said, doesn't get lost. In any case, let's get underway. Or as I say in the YouTube creator parlance, let's get right into it. Is that what people say? I think so. So, the number one thing that you can do to trade Bitcoin, Solana, and Ethereum is to make sure you're trading using leading information about the highly relevant maths that actually move the market. Right? Why? Well, because those are the numbers that actually matter. And what are those numbers based on? Well, those numbers are the numbers you get when you look at the volatility and the correlation, the variance and its correlation, the entropy and its correlation, the returns and its divergence. Right? You can even look at the divergence of the entropy oscillator. You can look at the divergence of the laser returns or returns oscillators, different returns devices we can use. These are all different ways to measure the highly relevant maths, which include the mean, the returns, the standard deviation of returns, the entropy, and so on. We at Alpha Trading, which is a group I co-founded, along with 5 other fantastic men, we made a bunch of tools. To be fair, I just fly the planes, I don't actually build them. Well, I might have had some handiwork involved in a few here or there. But our team built an amazing set of indicators, which I consider to be, without question, the single best set of trading indicators available to retail traders. And I say that having tested the tools that most people use on TradingView and other such places for many years, and having seen how awful they are, because they're based on lagging information. What is lagging information? Lagging information is information that is derived solely from price. Solely from price. That is trying to tell you the future price based on the past price. That's not how that works. You can't determine a future price based on past price. You can determine other things based on price, or partially based on price. That you can do. But those are not the things that they're doing in the world of traditional technical analysis. They're using lagging information to try to predict future price based on past price. And that doesn't work. What we do at Alpha Trading is we use the leading information, and that is we calculate the mean, we calculate the returns, right? And the standard deviation of said returns, etc., and the entropy. Right? We use the normal distribution model, and we use the Laplace distribution model. And there's a reason we use these distribution models, right? Because they work. If they didn't work, we wouldn't use them. It really is quite that simple. So why do we use leading information again? Well, because it's first of all leading information that actually has a higher probability of telling you the actual probability or tendency of the price action on the current candle and on future candles. How do we know this? Well, because of statistics and probabilities. Right? We are able to measure these things. Look at any time set, look at any data set, look at any time frame, look at any asset, and I guarantee you But the VEPs will give you better probabilities and statistics as long as there's liquidity in the asset that's being traded, so that there's enough data to actually measure things, right? Any asset you can properly measure, you'll see better information on the VEPs than on lagging information. In fact, even on information that's partially broken, you'll still probably get better information, because at least you'll have some measure of probabilities based on the standard deviation of the existing data, whatever it might be. But of course, you want to only trade assets that are actually liquid, or liquid enough to be trading on whatever time frame you're trading it on. And generally speaking, you want to be trading low time frames, because that's where you'll find more occurrences of opportunity to exploit the inefficiencies of the market, which is random. And when I say the market is random, I mean most of the time, the market is random, okay? The overwhelming majority of the time for most assets. Now, there are some assets that have more trending moves than others on certain time frames or whatever. But generally speaking, assets are in a random walk, or on a random walk. What does that mean? It means on whatever time frame you're looking at, most of the time, that asset will be seeing its price action, following the returns, in a random walk, meaning it goes up and down, goes sideways, and it's based on randomness as opposed to a trend. When do you know it's in trend? Well, you know it's in trend when you see that the entropy is fully expanded, or is heading towards full expansion, and is in trending mode. How can you tell that? Well, it turns out there's an indicator for that. In fact, there's a few, but there's one. And basically, we've just made a few versions of it at Alpha Trading. And yes, you can also kind of tell that if you know how to read other indicators. You can tell that using other indicators that exist, but they're nowhere near as easy to use. And they're also not just in one indicator. Got to use a couple of them. Right? So instead of having to make you use a couple of separate indicators, which is sometimes necessary, but in this case it's not, we took a couple of relatively complicated indicators and simplified them down to one indicator that you literally can read by just seeing it at once, at a glance, without having to cross-reference information from two different indicators and then, decipher whether or not it's in a trending walk, a trending move, or random walk. How do we do that? Well, we have really smart people in our brain trust at Alpha Trading, people who really know how to work the magic when it comes to math and coding and developing indicators that work on TradingView. So we literally have an indicator, right? The entropy indicator, called the Swiss. It's the latest version of it. And the Swiss packs a lot of punch. It doesn't just tell you the trending move and the random walk. You can also see tons of other information on there. You can see how it's correlated to the alpha squared entropy power percentile, or the Shannon entropy percentile. You can also see how it's compared to the alpha power percentile, or the AVP, the alpha volatility percentile, or the AVR, the alpha volatility radar. There's a lot of things it does, actually, and you can see for yourself when you get to that level. I say get to that level because you cannot just get access to that indicator if you've never traded with these tools before. Ask all you like, we're going to say no. Unless you can prove to us that you're actually an experienced volatility trader, there's no way we're giving you access to the entropy indicator without first proving that you know what you're doing with volatility, probability, and statistics. And that you can do for free by signing up to our Volatility Starter Pack. Oh, what's that? The Volatility Starter Pack? Well, as I said many times before, that is a free set of indicators that we built and we give away. And we also give away a pre-populated chart for it, which literally lets you learn how to trade volatility, probability, and statistics, meaning you can come into our Discord for free, request free access to our free volatility starter pack. And those indicators are yours to keep and use as long as you're in our Discord, right? You don't have to be in the Discord 24 hours. I mean, as long as you don't, quote unquote, leave the Discord permanently, right? As long as you're in the Discord, which is free to stay into the free area, you have free access, and you can use those tools and ask all about them in the chats, in the chat rooms that you'll get access to. You can learn all about them in the education channels that we give you access to. There's tons of videos, there's tons of tutorials, there's tons of information. You can ask real traders who use them how to use them. And of course, you can ask us during the live streams, which are 5 days a week typically, except on weeks like this week when there was a holiday for Memorial Day. We don't usually do streams on holidays when the market is closed. Sometimes we do if there's something specifically interesting happening, but usually not. And that's it. That's how you get your free access and free education. So that is how you trade Bitcoin, Solana, Ethereum, or frankly, any asset that you want as long as it's liquid. And you can see charts for it on TradingView. Okay. Happy trading. See you at Alpha Trading. Oh, yeah, the URL I forgot to mention. It's alphatradinghq.com/discord. Once again, that's alphatradinghq.com/discord. Might see you there.